Eh, Hello guys, welcome back to our YouTube channel guys. Yeah, so as promised guys, yeah, uh, we said we're gonna be uploading 2 to 3 videos a week guys. Yeah, so in this video guys, today we're gonna cover the topic of an imbalance. We've been seeing comments, people were asking what is an imbalance and then how to use an imbalance to capitalize on smart money. So yeah guys, now I'm gonna explain what an imbalance is and then how to use it. And then before I start guys, for the people who are new in our channel, please help us to grow this channel by subscribing there guys. Yeah, you won't regret subscribing in our channel. We're gonna make sure that we provide you with the best value. Yeah guys. Yeah, so what is an imbalance? An imbalance is an area in the market where only one person it is involved in the market. That person could be the seller or the buyer. So an order block, before it could happen, it normally the market makes the manipulation guys before an inducement it can happen. And then after that we must look for an imbalance where only what we call, where there was an institutional order block. So we can't be taking every imbalance in the market and then try to want to trade like them. We use an imbalance like guys to confirm the order block guys, yeah, that it will be valid or what. So for example here guys, if we can, let me take the yellow color. If you can see like here guys, the market it has been making equal highs here, meaning that it was building a liquidity at the top here. The market finally went up to take up this liquidity, but before it went up guys, look what happened here. The wick of this candlestick, it represents that there were sellers in the market, and then the body of this candlestick, it indicates that the buyers were in the market. So the market closed with that candlestick there above. So when it comes to this one here, this red one, the aggressive one that went down, the wick of this candlestick, it indicates that the buyers were in the market right here, and then the body of this big candlestick, it indicates that the sellers were in the market. So now the market close like made a week here, it shows that there was the buyers involved. On a new candlestick here guys, the this week of this candle, it indicates that the buyers were in the market. So how are we gonna use this thing to utilize on how are we gonna use it to identify our imbalance? So guys, let me take a different color. I'm gonna start here on the guys on the, what do you call, on the week of the previous candlestick here before the market went down. I'm gonna draw it to the future there, and then I'm also gonna start on the upper week of this next candlestick after the aggressive move there. So in this area guys, we can see that like since we only have a red candlestick like here guys, this is an area where there are only sellers in the market. It's only sellers here guys in the market, there are no buyers. So this area, it is called an imbalance. Hence it's only one person involved in the market. So sometimes this area, or some people, they call it insignificant price action. Yeah, but now, so it's not about like those big terms guys. Just know that it is an area where there's no, it is an area where there's only one person involved in the market. So right now I want to show you how you can identify the, what do you call, I want to show you on how you can identify the imbalance and then use it as an advantage. So if I take this pen, let's say the market it were to come back, to come and feel, what do we call, and feel this imbalance. We're not gonna trade the imbalance. When the market feels this imbalance, we're not gonna trade. No guys, what we're gonna do, we're gonna look for the market to feel this imbalance, and then after that mitigate our order block. Remember, here is our institutional order block here guys. That's why I said we're looking for the imbalance where there was an order block above there. So it can also either be for a buy or a sell side, but for here, since we're looking at a bearish move, guys, like yeah, it's gonna be an order block, or we can call it like a supply area, like right there. So we're only gonna focus only when the market reaches our order block right there for us to sell the market. There's no way we can sell when the market feels this imbalance here, guys. We're not trading an imbalance. We're using an imbalance to confirm what? To confirm that our order block would be valid at the top. Then that's when we're entering there, guys. Yeah, I hope I explained this thing very well. Yeah. This is a typical example of what I've been explaining there. If you can look at here, guys, the market, it has been what do we call it? It has been forming a liquidity before here, and then the market did what? It went up here, meaning it took out this liquidity. There was money resting above this liquidity. So after that, the market went down impulsively with these big candlesticks there. So if you can look what happened there, guys, we can take the lower wick of the previous candle. It's right there, and then we take the upper wick of the next candlesticks after that big move here. In this area, this is where we managed to see that here we are having an imbalance. This area is our imbalance, so we're going to wait for the market to come and fill this area before we can sell on the order block above. We're not going to sell here. This is where like people got trapped here, guys. People sold like here when the market come in and feel this imbalance, even though it didn't feel all of it, but I know some people that they will come and try to enter here. So for us, guys, since we're trading those two strategies, guys, this is how we integrate the two strategies, guys. Now we're gonna take what do you call, let's just call it this thing a trend line. Let's say we had a trend line going up there, and we also had a trend line below here. What do we see here? Now we are seeing a falcon pattern here, guys, meaning if I'm having an order block, look at the conferences, how many we're having here. Let's say now we have a pattern with 1, 2, 3 touches, and then you know that a third touch has a high probability, guys. Another thing, what do we have? We're having an imbalance. The third thing we have, we're having an order block. Another thing we're having a what do we call a reversal pattern here when the market mitigates our order block. So with this kind of a trade, guys, yeah, we don't hesitate. We know that the market needs to come down here and reach our 90% rule here, guys. Yeah, this is how we integrate these two strategies to capitalize on the market, and then this is how we use an imbalance when we are trying to catch those nice trades, and then those nice order blocks there. We're not trading an imbalance. We are using an imbalance as a confluence that our order block there above it will work. So I think, guys, I explained everything about an order block, about an imbalance there, guys. So please, for those who are new, don't forget to subscribe into our channel, guys. We'll be sharing free content, guys. Yeah, I hope to see you in the next video. Cheers.